Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. With news, China remains an enigma, with some steps forward, but undermined by questions about how that is happening. The Chinese banking regulator is seeing sharp rises in bank loans coming. It urged lenders to prepare even though they aren't exposed yet. Bad loans have risen to 2.1%. Banks have been told to boost profit retention to accumulate capital while appropriately reducing or limiting bonuses. China's economy is expanding. Second quarter 2020 GDP will be announced on Thursday and it is expected to show a 2.1% growth rate. That is a sharp rebound from the 6.8% fall in the first quarter of 2020 and miles lower than the 6% rises in 2019. It is a rebound that many of its neighbours are hoping to ride. Underpinning their recovery, car sales rose in June for the fourth consecutive month and posted its first quarterly rise in 2 years. It's now the world's largest car market, of course, with 2.3 million vehicles sold in June, rising almost 12% year on year. But new debt is doing its part still. Chinese banks extended $400 billion in new yuan loans in June, up a startling 22% from May and up 13% year on year. There is nothing that new debt can't solve in China. And China is pulling back its limited transparency, suddenly stopping the release of some key data without explanation. In Australia, ANZ says the 6-week lockdown of metropolitan Melbourne will lead to a second wave of businesses going belly up. And the Canberra government is readying more wage support as their current program comes to an end. It's a treadmill they can't get off. In fact, so far no country has shown how to get off. Meanwhile, Aussie bankers are pressing customers who can pay to take themselves off the loan deferral scheme. In the US, the Federal Reserve balance sheet is still shrinking, now in a fifth consecutive week. After growing sharply to almost $7.2 trillion, it is now down to under $7 trillion, a decline of $248 billion. And the USDA's latest World Supply and Demand report has raised its forecast for imports of beef into the US and lowered its forecast of US milk production. US red meat production is falling and is projected to fall well into 2021, even if the trend is relatively minor. Both trends will aid New Zealand's trade in these key commodities, but they do see dairy output there rising in 2021, even if they missed forecasting it falling in 2020. US Treasury 10-year yield is holding at 0.64%. The gold price has held its lower level, now at $1,799 an ounce. And oil prices are firmer. They're now just over $40.50 a barrel in the US, and the international price is just over $43 a barrel. And the Kiwi dollar is marginally firmer too. It's just on 65.8 US cents. On the crossroads, we're also firmer at 94.7 Australian cents. And against the euro, we're up to 58.3 euro cents. That means our trade-weighted index has risen slightly to 70.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.